many firms, other companies have approached them for a takeover, but nothing is finalized just yet. But let's take a quick look at the pre-opening rates, settled about 112 points lower. Axis Bank and Tata Motors are your top losers at the moment. Sudarshan Sukhani is still with us. Sudarshan, what's the big call at 9:10?
Well, I would avoid that index and not buy this dip. Wait for tomorrow. UVL is a buy with a stop under 1640.
Okay, all right. Sudarshan got that. Mitesh, what about you? What's your 9:10 call?
Yeah, I will go with a sell call. There will be a sell on Jubilant Food with a stop at 577 for targets of 540.
Got it. Okay, all right. Thanks, gentlemen. We'll come back to you all in just a bit to take a fresh call. For the time being, though, the Nifty has started off with a cut. I mean, the indications are 110-point downtick. That's more or less in line with what the SGX Nifty was suggesting. But Sonia, the biggest loser on the Nifty is Tata Motors. Clearly, the street didn't like those numbers.
Absolutely. And, just a couple of brokerage views I want to put on board. JP Morgan has cut their target price on Tata Motors to 410 from 450 earlier. They've also cut the FY23 to FY25 EBITDA by 3 to 9% for Tata Motors. They are saying that the India business has disappointed in Q2 and the management has cut its guidance both for volumes as well as free cash flow, which is a big negative coming through. CLSA, on the other hand, has raised their target price to 491. They're one of the few that are still optimistic post the numbers. They say JLR has performed better than the India business in Q2. But there are 2 points that really worry me, if you look at the numbers. One is that the debt of the company has risen quite a bit, stands at almost 60,000 crores right now because of working capital deterioration. And the other is that JLR has gone ahead and lowered its guidance for FY23. They are saying that at best EBIT margins will now be positive. Earlier they had guided for a 5% EBIT margin. They are also expecting only a free cash flow break-even in FY23 versus a £1 billion free cash flow guidance earlier. So cutting of the guidance is something that the street doesn't like at all. But let's go across to Mangalam. He's tracking Pidilite this morning. Mangalam, over to you.
Well, Pidilite numbers are weaker than expectations, and that's primarily on account of higher raw material costs, which have hurt the company's EBITDA as well as the net profit. If you just take a look at their gross margin as well, that has been lower, both quarter-on-quarter as well as year-on-year, and is one of the lowest that we've seen in the last many years itself. As far as the numbers are concerned, revenues just above 3,000 crores as against street expectations of under 3,100 odd crores. Margins have been a big miss, 16.6% versus expectations of 17.5%. Remember, the company's overall long-term guided band is 20 to 24%, so there should be some doing for the company to go ahead and scale back to those margins, and as a result of which the net profit declined year-on-year and has been much lower than the street expectations as well. Consumer business volume growth has just been 1.2%. The street was working with low single digits, but this is below that as well, and overall volumes have grown in marginal positive terrain, so that would be assuming sub 1% itself. Now, the gross margins at 41% is the lowest that we've seen in the last many years, if not the lowest ever. And to that, the company said the input costs this time around have been at all-time high. And while margins have been impacted by raw material inflation, high price inventory and volatile forex too has impacted them. For demand, urban has grown faster than rural, so this is a trend we need to monitor going forward. And softening of commodity costs as well as their key material, raw material, which is VAM, has seen some decline. So the second half of this year will be extremely crucial. So management commentary is something that we'll be watching out for. On the back of that, brokerages with the limited numbers that we have so far have negative views on the stock. Macquarie has an underperform call with a target price of 22.50, whereas Goldman Sachs too has a sell call, the target price at 22.50 itself.
Okay, all right. And in fact, we'll be discussing the second quarter numbers and the earnings outlook with Mr. Bharat Puri, the Managing Director of Pidilite Industries, at 12:30 p.m. later today. Stay tuned for that.
Okay, we just have, I think, less than a minute before the markets open for the day. Looks like it's going to be a weak opening. Do keep your eye out on Axis Bank. It is the top Nifty loser at the moment, down almost about 3.5% in pre-opening. While Tata Motors, Infosys, TCS, it's an across-the-board sell-off that we're preparing ourselves for. Sensex down about 500 odd points. Just 20 seconds left. Mitesh, a quick comment from you on Axis Bank.
Disclaimer here, I personally hold the stock in my portfolio. But that apart, I think the stock